is it all in China right now?
I think people are excited about a rotation into China, but I have to tell you, I'm not a buyer. I mean, I know there are people at BlackRock who are saying this is a renting opportunity and they're going to be tourists, and that's great. But I think there are better opportunities, frankly, still in U.S. equities. I understand that Chinese equities are cheap from a multiple perspective, but sometimes stuff is cheap for a reason. And I'm so thankful that the Chinese government has decided to put a floor in the economy. That's necessary for overall global growth, and I think that's very supportive of some of the global names that I love. That said, we're in a bit of a show me period for China. Like, we've had some false starts, we've had some big promises, and then we haven't had follow through. So I'm okay if I miss part of this rally if I'm focused on the bigger beneficiaries from China not falling through the floor.
Okay, so what about the U.S. companies with exposure to China? Like Bank of America just upgraded materials. They have one of the best betas, they're the top sector related to China, and they've underperformed in certain months. Like, what do you think about that? I
mean, that's historically been the right playbook, right? Resources have been big beneficiaries. I'm not super convinced that that's China's playbook going forward. Spend on materials and infrastructure. And I think a big thing that we need to remember is that the U.S. election is a massive policy event. The relationship between the U.S. and China and what that does to global trade and to global growth is a big question mark. I think under either administration, we're going to see some changes in 2025. So I'd be cautious about making a very big long-term investment before we see the policy move.